Mansoor Mohi-uddin, UBS Global Head of Currency Strategy. UBS, by the way, is ranked second behind Deutsche among the world's biggest currency traders, and that's according to Euromoney. Good to have you back in Asia. Welcome back.
Thank you very much.
You've been a dollar bull way before everybody dared even think about the prospects of a strong dollar. Why are you still a dollar bull?
A couple of reasons, Haslinda. One is that we always thought last year's rally in stock markets and commodities and short dollar trades was very overdone. And I always thought that once risk aversion comes back, the dollar would benefit from that. This year also, as Patricia said just earlier, the market is very much focused on what the US will do in terms of Fed policy. Now, in America, we have a US economics team. They have a very bullish forecast on Fed funds. They think the Fed will start to raise interest rates from June. That's much earlier than the rest of the market. If that's the case, the dollar will be supported further.
You're different in a sense that you're a long-term dollar bull. I mean, if you take a look at people who have called for a strong dollar, they will only go as far as 6 months from now.
Yes, I mean...
Fundamentals don't support a strong dollar.
Yeah, there's reasons to be bullish and bearish on the dollar in the longer term. I mean, the concerns are obviously the fiscal side in the US, as well as all the debt that's in America at the moment. And to be honest, that's a concern not just for America, but for other G7 economies as well. And emerging markets are free largely of those concerns. But some of the reasons why we should probably be optimistic on the US in the longer term as well as the short term is the fact that there's no real alternative to the dollar. And I think central bankers now are facing that, particularly with the euro.
I want to take a look at the Fed's move, raising the discount rate the first time in 3 years. You say it's more significant than most people think.
That's right, yes. I mean, last night we had Janet Yellen trying to talk down expectations again, but clearly the Fed move has now given them the opportunity later on to raise the Fed funds target rate as well. That's the benchmark rate. The discount move is highly significant, and the market probably wasn't prepared for it. Now, we actually have seen the dollar slightly weaken this week because positions are short the euro at the moment. But once those get cleared out, we'll probably see the dollar strengthen again.
How soon do you see the move?
Yeah, sure. So overnight, we changed our 3-month forecast. We had a long-standing 140 forecast in the euro, and we met that. And now we have a forecast down to 130 for the euro in the next 3 months.
Mansoor, Tricia in the newsroom, after what you mentioned just now, then do you think that the correlation between the dollar and risk appetite has broken down and it's now changed from inverse correlation to a direct correlation now?
Yeah, it's a very good question, actually, because over the last 10 years or so, we've seen that the dollar has clearly weakened when investors have been risk-seeking. It's largely because US interest rates were too low for US investors when they're risk-seeking. Now we're beginning to see some signs that maybe that correlation will shift again, particularly if the Fed are more preemptive than other major central banks. And as the US economy recovers, and if stocks were to go up and Fed funds were to go up at the same time, then the dollar will benefit. We're not there yet, but we may see what we call a regime change in the markets this year on that correlation.
Right. Okay. Well, we're going to move on to the euro and the sterling. There's been a lot of talks now about these two currencies facing intense pressure from the fiscal deficit side. Some say that the sterling may even fall faster than the euro due to uncertainties over the upcoming UK elections. What do you think of this?
Clearly, investors are concerned now about the UK elections because the polls have narrowed over the last couple of weeks or so. And that's why we've seen the euro regain some value against the pound over the last couple of weeks. Having said that, though, I think the main concern for sterling in the short term is actually what the MPC will do. I have to say I was surprised when the MPC came out and said that they weren't going to entirely rule out continuing to do quantitative easing in the future. So that's obviously a short-term risk for sterling. The longer-term risk is obviously the fiscal deficits, and that's why the market longer term is more worried on sterling.
The euro will remain under pressure going forward?
I'd say until the Greece's situation is sorted out, then it will remain under pressure.
How serious is the situation in Greece? I mean, there are two sides to the coin to this.
Absolutely. Yeah, I mean, Greece is only a small part of the eurozone. The main worry here is that whether Greece can repay its debts in the long term. And at the moment, it's not competitive, and that's why the market's very concerned about Greek bonds. In the past, Greece would have devalued or cut interest rates, but it's not in that position as part of the euro. So its path to restoring growth in the economy looks very difficult at the moment, and that's why the market's nervous about its big budget deficits now.
Where to for the euro, and what's the best play to play the currency?
Yeah, sure. I mean, at the moment, I would say the market's quite short euros at the moment against dollar, and that's why we're seeing it going sideways. But lots of investors also trade it on the crosses. One of the trades we like is to sell the euro and buy the Swedish crown. or sell the euro and buy the Norwegian crown as well. Those central banks in the Nordic countries are going to raise rates a lot faster than the ECB this year.
Okay, I'm going to put you in a spot at the moment. What would be the best currency trade for 2010 if we had to make one trade for the year?
I would actually say it's something that people find very difficult to trade at the moment. That's dollar yen. But if the Fed is going to raise interest rates a lot earlier than the market expects, that currency pair will start to trend higher from here. But it's a very difficult currency to trade at the moment.
And for Asian currencies, apart from the yen, what should we be looking at? I mean, people are liking the won a lot.
Yeah, sure. Our emerging markets team, they have a focus on what we call the larger continental emerging market economies. So they're like places like China, Indonesia, India. I think the main currency that they're focusing on at the moment is the INR, and they've been telling clients all the way since October to short European currencies against the INR. That's actually worked very well.
Okay, Mansoor, we'll leave it there. Mansoor Mohi-uddin, UBS Global Head of Currency, joining us here on The Trade.